But anyway, on with oil. Like I said, get my free training underneath. I'm going to repost this. So oil, previously Middle East tensions brought you all the way up here. You then had, as of late, reduced demand and increased supply. That has continued the rhetoric around OPEC, and you've come right down. You've now got further global tensions that aren't really feeding into the demand side, somewhat surprisingly, I think. But you're coming down to these previous lows. Now, this low area here, okay, you found that you bounced off of it so many times, okay? And ultimately, these things have to break. For the market to naturally downtrend over time with reduced demand, remember up here, you had an energy crisis, everyone's going crazy, and then that just flips. You get the absolute flip side of that. For the downtrend to continue and the sentiment to continue in that trajectory, as it probably will, you would be brought down to your 200 MA and these key areas of support. That would form, like I said, a downtrend because you're coming under the previous low and you've got a lower high. Normally it's quantified by 2 consecutive lower highs and lower lows. So any drop nearer here, and I'm happy to buy. Okay, I would say this is quite a risk averse zone around your $60, $61. You've got various levels of rejection. Okay, you've seen it before, in other words. But like I said, the main thing for me is that continuation of the downwards market. All right, so I would say if you wanted to short oil, it's far too late. I really would not short this. Why? Well, it should be quite obvious, but you've come down. You had one really large candle there. You also had rejection at the top. But since 23rd of October, the week beginning, you've had 1, 2, 3, 4, 5, 6, 7 candles down. Okay. Now, what you can see as well is every push up has immediate rejection. And that may have been ideal for anyone who wanted to take hedge entries. But at this point, you're really pushing it. You know, you've got $88, $73. Yes, like I said, I do think it will come under this low. I don't think you'll crash through it immediately. You may find you have a bounce alongside your 200 MA, but I would say it's more of a contentious area. This, you've had so many hits on it. I would just be careful. I don't think it's really solid, especially the way market sentiment is going. Nonetheless, it's far too late to sell. You should have sold at $88. It's too late. I would consider perhaps lightly buying nearer $70 for a sharp bounce. If it does bring you up to very early levels of resistance, maybe like $73, I would consider exiting. That wouldn't shock me at all. Very early exits on that. It will depend on the sentiment at the time. If it's still dragging the market down viciously, then I may consider changing my bias. But definitely at the moment, I'm not looking short. It has gone its way already. Okay. If you're someone who's saying, all right, well, the sentiment is with short side oil bias, just be very careful with it, because you have to remember really that you're just shorting low prices. Essentially, you're shorting after the move. So if it does become the case that suddenly you get this massive change in market sentiment, you know, OPEC or whomever says, you know what, we're going to do this, that, or the other, then you'll find a massive switch. So if you just shorted the lows into support, you've shorted into support incorrectly, and the sentiment changes, you'll get a massive blast up. Now, you have to remember as well, it's been weeks and weeks and weeks of this bias, and ultimately that bias will change, as it has always. It has always gone from a case of increased supply to increased demand, or at least that approach from buyers and sellers who believe that is going to be the case, whether it actually is or not. So too late to sell your oil. I wouldn't be shocked if you get a very minor bounce near $70. Wouldn't shock me at all. But really, for risk averse and probably investor longs long term, anyone who's sort of wanting to hold oil for longs, I would just hold off until about $60. I think you may get down there in the future, given you don't have any massive, ridiculous change in sentiment, like I was saying. I think there's room for it, and I think that's much better. If you did want to short it, you could consider taking a very light entry in line with where you've just had it before. But any serious market sentiment change, I would say, will probably bring you up here. And again, if you're someone who's looking for a longer term short or more risk averse short, you would be better off at a higher price. You may find that comes in $10 time or so, but it could take a minute to do that. You'd really need some big change to get there. given the market sentiment at the moment, I wouldn't be shocked if that occurs. So you could likely short, in my opinion, near a 77.5, but furthermore, $82 probably going to be a little bit more of an ideal level to do that. But no shorts at the moment, and I'm holding off longs. So that's oil. Don't forget to get my free training underneath this video.